We've moved time slots, so Bulletin kicks off in this half hour, and we focus on business, economic news, and we have huge news in just a short while ago. Really, one of South Africa's deepest economic fears has come true tonight. Rating agency Standard & Poor's has downgraded us to so-called junk status, or non-sub-investment grade. This follows a very hotly debated and protested cabinet reshuffle just a few days ago, last Thursday, that rattled investors and weighed on the rand, and we're seeing a huge reaction tonight. For weeks there were fears that political uncertainty could trigger a downgrade in this country. Well, this evening South Africa received the news of the downgrade shortly after the markets closed. It could see institutions sell off South African bonds the government uses to borrow money. Efforts by the former Finance Minister Pravin Gordhan to rein in debt and to enhance governance at state-owned entities were seen as ratings positive and were seen to have helped South Africa to stave off a downgrade last year. Now, after Gordhan was fired, Fitch already released a statement on Friday saying it viewed the change in Treasury as a change in policy direction. Moody's, a different rating agency, rates South Africa 2 notches above junk and could announce a change on Friday. Already the yield on government bonds has gone up, suggesting that government will find it more costly to raise debt. Originally, this wasn't as dramatic as following the firing of then Finance Minister Nhlanhla Nene, but that could all change tonight with this confirmation of the downgrade. The incoming Finance Minister, Malusi Gigaba, has contacted rating agencies. He had tried to calm their concerns, but he's also enforced the view that Treasury may make different policy choices, may follow a different stance. He has said recently that tough and unpopular choices will have to be made to effect radical economic transformation. All right, let's get some reaction. Joining me on the line is Lesiba Motata, Chief Economist at Investment Solutions. Lesiba, this isn't fully a surprise, is it?
It is a surprise in that it has arrived now.
Very soon.
One would have expected this to come in a schedule in a June, July or December. But this arrived now, and I think it's problematic.
Problematic? Explain that. Do you think the rating agencies have moved too quickly, haven't even given the new finance minister a chance, or problematic because this triggers off a whole lot of repercussions for our economy?
It triggers a whole lot of repercussions for our country. Because when we look at what happens in other countries, it will take a long time to come out of this. Admittedly, for South Africa, only 90% of rand-denominated debt remains in investment grade. But the fact that the 10% is now junk, so-called, is problematic because it requires a concerted effort by those that are in authorities to not only accept and deal with the reality that we are now junk, but also to provide a response so that we don't get further into non-investment grade. In other words, we are now double B. We can get easily to double B. In double B plus, we can get easily to double B, and so the story can continue. And therein is the story that happens with other emerging market countries, that once you're downgraded once, it's not the end of the story. Notwithstanding,
Lesiba, a lot of people are struggling to understand what this means for the man on the street. Can you try to tell us as simply as possible what it means for each and every South African, even if they're not buying government bonds or selling government bonds?
So when things like this happen, when the currencies begin to fall, bond yields go up, a central bank looks at this matter and monitors whether there's a systemic financial crisis beginning to brew. And their natural response is to increase interest rates. This happened in Russia. It happened in Brazil. And when those increases in interest rates arrive, it means the cost of funding goes up, and it's a structural one. In other words, it will take a long time for it to come back down. So the man in the streets feel the higher cost of sustaining debt And when they borrow more, it becomes more expensive. It eats up all the disposable income that a consumer earns. Notwithstanding that we have taxes that are going up in our country, then you add the cost of debt that begins to go up, it becomes a chaotic situation for households.
All right, thank you for that response, Lesibo Motanta from Investment Solutions. So as he's explaining, this has huge ramifications and it topples down to the man on the street, somebody buying a car, for instance, somebody trying to buy a house in future. We were looking at the possibility of interest rates coming down. We're now looking at the possibility of the rand going down, inflation going up, interest rates going up and affecting each and every one of us. And that's over and above the effect of less money that can now be channeled into social spending, into things like social grants, into things like infrastructure, because we could be spending a whole lot more on paying back our debts. Now let's take a quick look at the rand, and I can tell you that it's reacted quite sharply in the last few minutes, and I can't show you exactly, but we were at about 12 rand 80, and this was sort of when the report started coming out of that cabinet reshuffle, and we shot up. And remember that when the graph goes up, it actually means weakening, because what we're showing here is the rand to the US dollar. So it takes more rand to buy a US dollar. That means when we go up, we are weakening. And I can tell you, so since those reports first emerged, then it was confirmed, the rand was leveling off. But today, after this announcement, we were about 0.5% weaker against the dollar, according to the last close. It then shot up again, and we're now sitting about 2% weaker against the dollar on the day at about 13 rand 70. So literally over the last few days, the difference here is about a rand to the dollar. So we went from about 12.80 to the dollar to 13 rand 70 to the dollar, which will be seen as significant. All right, we are joined on the line by Daniel Silk, political analyst, and we're getting fast and thick responses to this downgrade into junk status tonight. Daniel, thank you for joining us. Your initial reaction, were you expecting this so soon?
Well, I think we've been threatened with this now for possibly the last year from all the rating agencies. They have decisively told us in no uncertain terms what we shouldn't be doing, and we walked right into the trap. So on the basis of what happened with the cabinet reshuffle, I think it was only a matter of time. It perhaps didn't expect it quite as rapid as this, but I think you can get the idea that the global investor community is now extraordinarily concerned about South Africa. They are extremely concerned about the independence of our institutions. They are concerned about the motives for the cabinet reshuffle. And as a result, this has been their reaction.
There have been concerns that this has been so personalized, that Pravin Gordhan was seen as the darling of rating agencies, and they shouldn't threaten, that if he goes, that everything will change. But this quick response does suggest that he was seen to be taking us on in a certain policy direction. Do you agree?
Well, I think government policy is very confused in general, but what I think was important was that the type of cabinet reshuffle that we had and the negative consequences politically that has emanated within South Africa since that reshuffle has played itself out on global markets. It's as simple as that. It's rating agencies like Standard & Poor's saying, just hold on, South Africa. What is this level of political intervention in the Treasury? Just how much is this about the removal of a finance minister who's done his job, or is it about protecting vested interests? And I think that these suspicions, which we've been warned about in the past, have really come home to roost. It's not necessarily about the individual of Pravin Gordhan. It's about the background motives for this cabinet reshuffle, which is currently finding great debate within the ANC as well.
One of the motives sounds, on the surface of it, great, radical economic transformation. What do you say to South Africans who think that sounds like something we should be doing, and they're baffled that this causes all this market and economic backlash?
Well, the irony, of course, of this downgrade is that it actually makes so-called radical economic transformation, which probably will cost the state a lot of money, that bit more difficult and that bit more expensive. If it becomes more difficult to borrow money on global markets and costs us more, and government wants to effectively increase the role of the state, increase the state tentacles into state-owned enterprises, into the business sector as well, this makes it substantially more difficult. It's more difficult for South Africa to provide social services, to provide more housing for South Africans on the basis of what it needs to borrow. So that's the real extreme irony of what we've seen today in terms of economic transformation. But let me just say on radical economic transformation, to me what really is radical is if we can get our growth rate to 4 or 5%. If we can stop, for example, half our school kids in South Africa dropping out of school before they reach matric, I think that really is radical, and those are issues that we should really be concentrating on as well.
All right, thank you very much, Daniel Silk on the line, a political analyst. Now, in other news,